What is going on, YouTube family? I appreciate you guys for tuning in to today's call. If you haven't already subscribed, you're gonna definitely want to go ahead down there and click subscribe. You're not gonna want to miss out on another one of these breakdowns. So I'm gonna go ahead and dive down into this and not waste too much of your guys' time. Today we're gonna be going over two recent gold trades that I've caught. As well as if we have time, I will go ahead and transition over into the EU trades that I caught. So let's go ahead and dive into this. First thing that we're going to do, of course, is going to start off on a higher time frame. I'm not going to waste too much time on the weekly and monthly, as I go quite in depth through the Discord on those two time frames. So and you guys can feel free to go ahead and check that out. The link will be in my bio. So let's go ahead and start off on the daily time frame. So again, we're looking at gold, but first thing that I want to point out is this 1940 price range, right? So if you notice when price tapped 1940 here, we pushed and we made this large push to the high, right? As well as when we pushed back, we rejected and respected here, here, and here again, right? So that gives us a very clear clue that the 1940 price range, there is a large amount of supply or demand. There's a large amount of liquidity, let's say, at this zone of 1940, right? So again, we're looking at Tuesday's trade first, which is going to be this candle right here. And then we'll be looking at Thursday's trade, which would be the current candle, right? So as we noticed, let me go ahead and take this off. Cool. As we noticed, obviously we had closed and broke below this 1940 range on this push right here. Right, so I want to go ahead and dive down into this and just keep in mind the 1940 range, right? So I'm going to find a square to write 1940, just so you guys can keep this in mind. And let's dive down to around like the H4 zone. All right, so when we're looking for this 1940 range on a lower time frame, such as the H4, before actually doing any markups or anything, you're going to notice that 1940 was right around this range right here, where we actually rejected and then we continued for this move. As well as when we pushed back down, we rejected at this 1940 range these few times about roughly a month ago. And then we kind of gave this zone, as we can tell, it's going to be a large level of supply that's here, as well as a large level of demand that was here, right? This is just a rough estimate of the drawing. You'll see my drawings once I unmute it, and it'll be much more accurate. But typically what we're looking to see is the fact that we traded between this range for a whole entire month, right? So, okay, as we can see, the first push below this range was here, and I believe this was Thursday of last week, so June 15th. Right, so up until the fact that we actually created this push below this zone, we're still typically just seeing if we would respect here, buy back up into here, until the fact that we broke either above and continued, or the fact that we broke below and continued, right? So in this case, obviously, it's clear to tell that this was the case scenario that we're seeing here. So it's just a matter of actually playing this out and waiting for a setup and getting a clear confirmation to actually execute this trade. So once I unmute my drawings, you're going to notice the fact that there was a more recent, smaller level of supply around here that created this push that pushed below this level that we have here. And then we noticed a large amount of volume push right back into this, right? And I believe this was all Wednesday, which would have been yesterday. Let's go ahead and double check. Yes, this was Wednesday following through to Thursday. So Thursday short, you're going to notice was something like this, break and reject of this area, and then a continuation of this push. And then the sell for today was somewhere below this level where we closed below, we rejected and continued, right? So obviously we can all agree that we're completely trading with the trend. So I'm going to go ahead and dive this down into the hourly and just kind of key out specifically the 1940 range, because that's the first thing that we want to take note of. So 1940 range is going to be right around here. I'm going to go ahead and draw this out for you guys. 1940 is going to be right roughly around here. right? So first thing, like I said, we're taking note that we broke below, and it wasn't like as if it was a liquidity grab and a fake out. We actually continued to close below on this higher time frame and let us know that we're actually continuing below this range after we broke below, came back and actually rejected and respected these highs that we had here. So now I'm gonna go ahead and unmute my drawings, and I'm going to explain this very briefly, right? So, like I mentioned before, we have this major demand zone here, a minor supply zone here. Reason it's minor is because the major supply is from this level here. So in between this major demand that we have and this major supply that we have, we're gonna notice that there is a 50 here, right? So I typically don't like to use, well, generally any indicators, but I typically don't like to use Fibonacci as obviously it's a tool, but I just typically don't like to use any tools. I tend to like to just focus on strictly price action and market structure and actually see exactly what the market is doing. So again, we noticed this push was last week that we broke below. We closed back above into this area. So upon Sunday opening up, which was right around here, we noticed that we traded below this 50, right? So two things to take note of. First is going to be the fact that we have the open of the week, which is labeled right here. The next thing is going to be the 50% retracement, which is just the equilibrium to these two zones, right? From this zone to this zone. And if I go ahead, and I'm going to show you guys exactly why this is important. If I go ahead and mark out this zone like this, we're going to notice, and let's put this on point. We're going to notice that there has been a lot of rejection at this level, right? We can agree, rejected, we rejected, broke, sold below. We rejected at this point here, as well as these minor points here, and minor points here and here, right? So we can all agree that this 50% is a very key level, right? So the reason that I executed Tuesday's trade, excuse me, was very, very simple. So Sunday opened here, like I have listed, and we traded all of Monday, which is a bank holiday, which is June 19th. We traded below the open of the week, as well as below this 50%, which we know there's a large amount of liquidity at. Hence, noticing the rejections on both sides of this all the way through. So first thing to take note of is going to be the fact that Tuesday, I typically trade New York session, so I am typically getting on around here. And a lot of the students, a part of my community, already know how I tend to mark up the 1 o'clock and 5 o'clock H4 candles. But to very briefly just skim over this, I'm typically looking for this 1 o'clock candle as well as the 5 o'clock close to kind of see what range London had given me. And it's kind of just giving me a sense of direction for my next 4-hour candle, which would be the 5 to 9 and the 9 to 12, right? So I'm going to go ahead and dive this down into the 15 time frame. And let's start off with this. So we notice that 1 o'clock is here. The previous low of day was as marked right here, and the previous high of day was here. So upon my session opening, which is around here, 5 o'clock, obviously this is pre-New York, but I am on around 7:30, just seeing what the market is doing and potentially seeing what is going to set up for New York. So the open of the 1 o'clock candle is here, and the close of the 5 o'clock is here. So as we noticed, we pushed very aggressively and we rejected this 50% retracement again, which we know liquidity lies at this line. So once we attack this line and reject it and close here, I was tending to see if during my session and the pre-session that I'm trading, to see if we will reject at this level and respect this high of day to then continue below, or if we would break above and continue bullish, or if we would break below this H4 close and continue bearish, right? So this is pretty self-explanatory in this case. 5 o'clock open here, so we're going to go ahead and follow along. We noticed that the lows were stepping up from here to this area that we are at now. But when we come, we reject to the T the close, the open, no, the close, excuse me, the close of this 5 o'clock candle. So obviously, if we dive down to the 3-minute or the 5-minute, we'll notice it would make something like this. And then we continue to short this, right? Now, reason was because price action was leading up to the fact that we are rejecting the close of the H4, 1. 2, we are closing and rejecting below this 50. We are trading below the open of the week, as well as we are respecting the high of the day. So obviously, if we're respecting the high of the day, this push was just a lower high to continue to take out this to make a lower low. So the trade is pretty self-explanatory. Originally, I was going to target right here, which would be the close of the H4. And as you guys can tell, volume and the momentum was on my end and helped push through here, pushed below the low of day, which would have been TP2. TP3 was in this zone, which was the major demand zone if we go back on higher time frame. And then TP3 was going to be this that we see here. We have a large amount of clear traffic to clear up, which we know a lot of liquidity lies in. So we're leaving a runner after TP1, TP2, and TP3 was hit to see if we'll break the zone and how much and how close we would get to this weekly low, right? So that's going to be the first example in the first trade that I had caught throughout this week. Now, well, on gold. Now we're going to go ahead and dive down into the next example, which is going to be Thursday, June 22nd, right? So we're going to go ahead and start off by, once again, and I'm going to go ahead and dive down to the 5 minutes so you can see these lines that I'm going to have. So cool. So this is pretty self-explanatory. I'm not going to spend too much time on this again. Ever since we were trading below this weekly low, which is this line that we have, yesterday's push, Wednesday's push had pushed below this low and pushed back up. And we created the high of day. So as soon as we came to trade below this weekly low, typically we would look to continue this bearish volume, right? Given that we know we are overall bearish, right? We broke this major structure that was right here. So we're continuing the volume, we're continuing this sell to see exactly where we're going on this higher time frame, right? So something that I just want to point out exactly how I caught this trade would be the fact that we're breaking below this level, correct? So the open of the 1 o'clock candle is right here, which is labeled open H4, and the close is going to be right here, which is going to be labeled close H4, right? So upon pre-New York opening, we noticed 8 o'clock came, we pushed, we rejected this previous demand zone that switched to be a actual supply, so we can label this out as liquidity, right? So let's go ahead and mark this out as 30-minute. Just put liquidity as dollar signs. Now, we notice that we use this previous demand, which actually is liquidity overall, however you would like to call it. We noticed that we pushed and we rejected this zone, right? So if we mark out this zone right here, which I don't tend to like to do, but if it helps you see, you could do something like this and notice that the minor supply that created this push got pushed right back into here and then continue to push short, right? But not only is that happening, that we're pushing this 30-minute zone that we have, we're also rejecting at the open of the H4 from 1 o'clock. Okay, now from this zone, we noticed a large push below this structure point, which is the low of the day. And then we just waited patiently and to see if we would reject this close of the H4. So in the case that, I'm gonna go ahead and delete this. In the case that we saw us trading below the close of the previous H4, then we can safely say that this is all bearish, correct? If we are pushing, let's delete this. If we are pushing above this close of H4 and above this open of H4, then we can say when we come to the higher time frame, this is currently bullish. So we had 1 confirmation here, 2 breaking the low of the day, 3rd confirmation rejecting perfectly. I'm pretty sure we can all agree this is a perfect reject to the close of the H4. So I went ahead and executed on this lower time frame right around here. Stops above the weekly low, because in the case that we were to come back and close above this H4, the candle is currently switching bullish, as well as this weekly low is being respected. And I do not want to be in any short positions while this is happening. So as we can see, this is two clear examples of this same setup working out. I just wanted to break this down to show you guys exactly how I caught this gold setup. And again, TPs were pretty self-explanatory. My take profit would have been right around this area that we pushed from first. So anticipating roughly like a 1 to 2. And then my next TP would have been along this H4 major structure, which would have been roughly around a 1 to 3-ish, 1 to 4. And we left the runners open. But since we are currently coming up on market close, I'll typically be looking to close out roughly around here in about the next 30 minutes. And yeah, this is pretty self-explanatory, pretty easy. I'm gonna go ahead and give you guys one more example on euro dollar, just so you guys can see the same setup working just on a separate pair. Now, this was from today, which is Thursday, and pretty self-explanatory again. So the two green lines are going to be the open and the close of this 1 o'clock to 5 o'clock kill zone. Open for this circle, close for this circle. So I want to see what's happening throughout this zone, right? So, okay, we push, created a low, higher high, higher low. We push, we created a higher high. Perfect. Now, in order for this to continue, we should see these lows be respected. But not only that, we should see, if this is continuing bullish, we should see this close above the close of the H4 and above the new open, like something like this, right? So after we pushed through the close of the H4, rejected this open of the H4, and came back and gave super similar to the other entry, as we notice here, a rejection. I'm gonna go ahead and change this so it doesn't confuse you guys. This is this. Cool. So as we noticed, a rejection to the close of that H4. Now, if we come down to this lower time frame, after we rejected on this news, I believe there was 8:30 news where the unemployment claims had came out. You're gonna notice that we rejected. I noticed this bearish volume kick in, come back up and close. So I entered here, stops roughly. You're gonna see this stop better on the 1 minute potentially. I'm gonna show you guys this. And you can see this a little bit more clear here. The rejection that we kicked in here, right here, I executed at 8:42. And I put the stops above these wicks of rejection. And then I'm gonna go ahead and come back up to show you guys. Go ahead and show you guys my take profits from here. So the first zone and the first area of interest was gonna be right along the open and this zone that we have here that made this push. So the first area of interest is going to be here, because if we break below here, then we are continuing bearish, right? And I'm going to go ahead and come back to 5 minutes, and I'm going to show you guys two perfect examples. So this one setup had two perfect examples out of it, right? So obviously I got the first entry and I continued this short completely down, right? Now, you're going to notice the second entry came at 10:10. So if you wanted a little bit more extra confirmation, this broke below the open of the H4, rejected perfectly to the open of the H4, and you could have pulled here, super similar to how we did on gold, and then continue this out, TP here, and etc., right? So this is pretty self-explanatory how the rest of this trade played out. And overall, our main target on this was going to be, I'm going to show you guys in this higher time frame. Our main target was going to be this weekly high to see if we would actually close back below this weekly high and just make this the push above this weekly and continue bearish, just to kind of come and clean up some of this volume that we have from this move that happened last week. So pretty self-explanatory. If you guys do have any questions or anything or any other examples you would like to see, feel free to reach out to me or just drop a question in the Discord chat. I'm sure somebody will be glad to help you. And yeah, again, feel free to subscribe and stay in tune for the next live analysis, which should be this Sunday, June 25th. And again, I appreciate you guys for tuning into this call. I hope you guys gathered some value and have a great rest of your week. Take care.